Welcome to the Learning Pines YouTube. We hope this video helps.
In this video, I will explain how to set up a ledger. First, it's essential to understand that a ledger is a fundamental tool for tracking all your financial transactions, providing a clear overview of your money. You'll need to decide if you prefer a traditional physical notebook or a modern digital accounting software. Before you begin, gather all your bank statements, receipts, and other financial records from the past month or quarter to ensure you have everything ready. Next, you'll create a chart of accounts, which is like a detailed map of your finances. This involves listing every single account, from cash and bank accounts to loans and owner's equity. Categorize these accounts into 5 main types: assets, liabilities, equity, income, and expenses. Assigning a unique number to each account, perhaps starting with 100 for assets and 500 for expenses, will greatly improve your organization and make data entry much more efficient. Now, let's move on to recording your daily transactions. For every financial event, you must accurately log the date, a clear description, and the exact amount. Employ the double-entry bookkeeping method, which means for every debit to one account, there must be an equal credit to another. For example, if you spend $50 on supplies, you would debit the supplies expense and credit your cash account. This ensures your ledger always remains balanced. Finally, regular review and reconciliation are crucial for maintaining an accurate ledger. Make it a habit to review all your entries weekly or bi-weekly to catch any errors early. At least once a month, reconcile your ledger balances with your bank statements and other financial records. This process helps identify any missing transactions or discrepancies. Promptly investigate and adjust any differences to ensure your financial records are always precise and reliable.
Thanks for watching. Consider subscribing if we helped you.